Hi everyone, welcome to another episode of Fintalk Insight. We're so happy to have you here as we talk about why more Indians are investing in gold exchange traded funds or ETFs. Before we dive in, let's thank the two amazing teams behind the episode. Stefto and our sponsor, Credit Click. At Stefto, we believe in empowering individuals and businesses with innovative financial solutions. From managing debt portfolios to pioneering digital strategies, we are committed to making your financial journey smooth and successful. And then there's Credit Click, your go-to marketplace for loans, credit cards, and credit score improvement services. If you've been searching for ways to unlock financial opportunities, Credit Click has got you covered. Together, we aim to make finance more accessible, reliable, and empowering. Now, without further ado, let's jump into today's episode. Picture this. You've just received your salary, you've paid off your bills, set aside a bit for emergencies, and now you're thinking about where to invest the rest. The stock market feels a little too risky, right? So now you turn to gold. It's been a symbol of wealth for centuries, and it's known for its stability during turbulent times. But as you explore your options, you realize there's more to gold than just shiny jewelries or heavy gold bars. There are gold ETFs that let you own gold digitally. Sounds futuristic, right? Let's break it down. What are gold ETFs? Gold ETFs are a way to own gold without physically holding it. Imagine buying a slice of gold bar that's stored securely in a vault. Each unit of a gold ETF represents a fraction of a gram of gold, and these units are traded on stock exchange just like shares. Here's how it works. Fund houses in India buy physical gold of 99.5 purity and store it in secure vaults. They then trade gold ETFs by dividing the gold into smaller units that you can invest in. This way, you don't have to worry about storage, safety, or purity. It's all taken care of. And the best part, the prices of these ETF units move in sync with the market price of gold, giving you a transparent way to track your investment. So why are Indians flocking to gold ETFs? Now, there's been a massive surge in gold ETFs investment in India. To put things into perspective, the physical gold held by these funds has doubled in just 4 years, from 27 tons in 2020 to 55 tons by October 2024. That's a phenomenal growth story, right? And it's not just the weight that's grown. The money pouring into these ETFs has skyrocketed too. In the past 21 months alone, domestic gold ETFs attracted a staggering 12,450 crores in net inflows. This trend reflects the growing preferences for hassle-free, transparent, and tax-efficient investment options. So how gold ETFs benefit you? Now you will ask. You might be wondering why all this fuss about gold ETFs, right? Well, here's why they're a game changer. Tax benefits. That's first off. The 2024 Union Budget reduced the holding period for gold ETFs from 36 months to just 12 months. That means you only need to hold them for a year to qualify for a long-term capital gain tax, which is taxed at just 20% with indexation benefits. Second, convenience. You don't need to worry about storing physical gold. No lockers, no insurance, it's all digital. And the best part, affordability. You can start small and gradually increase your investment. Even a modest budget can get you started with gold ETFs. So what are the challenges of gold ETFs? But like any investment, gold ETFs come with their own set of challenges. For instance, liquidity issues. Unlike popular stocks, gold ETFs don't trade as frequently. So if you're looking to sell a large quantity quickly, you might face some delays or price adjustments. And second, tracking error. Gold ETFs aim to replicate the price of gold, but there can be slight deviations due to market inefficiencies or delays. So the third point is recurring costs. Gold ETFs have annual expense ratios and transaction fees, which can nibble away at your returns over time. It's essential to weigh these factors before diving in. Now you might wonder how Stefto and Credit Click add value. At this point, you might be thinking, how can I make smart decisions in such a dynamic investment landscape? That's where Stefto and Credit Click steps in. Stefto simplifies financial complexities. helping you manage your investments, debts, and goal efficiently. With our expertise, you can craft a diversified portfolio that balances risk and reward. Meanwhile, Credit Click ensures that you have access to the best financial product tailored to your needs, whether it's improving your credit score, finding the perfect loan, or exploring new investment opportunities. Credit Click has got your back. Thanks so much, listeners, for being connected and your insight on this one. We really appreciate your time and patience. We would connect with you again on our next podcast. Thank you so much for tuning in again. If you found today's episode valuable, share it with your friends and family or anybody who is looking out to invest and earn in the future and get away from their complexities of investment day-to-day life. And don't forget to check out Stefto for expert financial solutions and explore Credit Click for all your credit and loan needs. We'd love to hear your thoughts. So drop us an email at hello@stefto.com. That's HELLO@STEFTO.com. Until next time, guys, stay informed and stay invested.